Hey friends, I'm so excited to be here today. I have 5 dividend stocks that I have purchased to hold forever that I want to share with you. The reason I want to highlight these 5 today is they all have huge news. Some of them have dividend increases. Some have really record earnings. Others are hitting all-time highs. Many of these 5 stocks, though, it took 5 years or more in the making to reach these massive results. The first one that I want to share with all of you is Alphabet. Actually, this one I've only owned since 2025, and so this is a very short amount of time. I covered Alphabet on my channel here. I'll link to the video in the pinned comment below and in the description. I covered it earlier this year. Alphabet, it hit a new all-time high today after hitting an all-time high just a number of days ago. It's exciting. This is one that I started accumulating this year in 2025, so it's the only one of this bunch that hasn't been 5 years in the making for me. The big milestone that happened with Alphabet recently is in the antitrust case. It was ruled that they do not have to spin off Chrome outside of the business. Chrome is really important to the Google ecosystem, and so I think that news was a trigger for the stock to start increasing in value again. They had some really good news as well on quantum computing recently. And I would say overall, Alphabet, it was undervalued. I bought the stock earlier this year because I saw value. I saw a great company trading on sale, and I knew they had some issues with the antitrust case and what would happen if Chrome had to be spun off. But I had a feeling that they would successfully make it through that challenge. And so that's what I do as an investor. I buy the best quality companies in the world like Alphabet, and I buy them when there's something that is causing value that I think they can get through. But I want to share the stats. As you can see on the screen in front of you right now, check it out. And so on Alphabet, they hit a new all-time high today of $261.68. It closed at $259.91. I started buying in 2025. My average cost is $180.44. My unrealized capital appreciation, believe it or not, this is in less than a year. It's 44%. This is pretty massive, honestly. This is amazing. And I'll talk about the lessons in a minute, but well, I'll just get to it. The lesson with that is when value exists with a Mag 7 stock that is as big, as covered as Alphabet is. Look, all kinds of analysts are looking at this stock. All kinds of investors, many investors across the world want to own it. If there's a market inefficiency and it's on sale, I kind of knew that wouldn't last very long at all. And so I covered this in my video and on my Patreon. My backyard patrons and corner patrons, they see my trades. I'll link to that in the pinned comment below. They saw that I was accumulating. I'm so thankful that I accumulated fast. And one of the biggest lessons with this is when there's value with a Mag 7 stock, as an investor, I want to move fast and establish the entire position quickly because I know it might not be there forever. But let me keep going. As you can see on the screen in front of you right now, the dividend yield on this is really low. My yield on cost on all the stock I bought in Alphabet so far is just under 0.5%. It's 0.47%. And so you can see the lessons on the screen as well. The first one I already covered. It's moving fast with a stock like this because inefficiencies in the market aren't going to last very long with a stock like Alphabet. The second lesson, though, is that this is a great dividend growth stock of the future. Look, a lot of people are saying, Ian, this is a dividend investing channel. What are you doing covering Alphabet with 0.5% yield and now even lower? Your yield on cost is 0.5% because you bought it lower. The reason I'm covering this is I'm a very long-term investor, and I see this as a great dividend growth stock of the future. When I look at yield on cost 10, 20, 30 years out, this is not just for me, but this is a generational wealth building mechanism with a stock like Alphabet. I see great yield on cost, and I'm willing for a portion of my portfolio to delay gratification on cash flow because it's such a great company and it's a dividend growth company of the future. Another lesson with Alphabet that I learned is that big companies, they can get even bigger. Look, in the olden days, I think historical kind of investing rules, we used to think like, hey, invest in the small caps or mid caps because they're so small, there's more room for them to multiply. And that's probably still true. But what I've learned in our recent world is we live in a winner takes all society. And companies like Alphabet, even though they're really big, they can keep getting bigger. It seems like this thing it's kind of unstoppable where they're going with so much, not only with Google search and YouTube, but with Waymo, with quantum computing, with so much more. And so this company could get artificial intelligence, can get so much bigger than it is. And so those are a few of my lessons that I've personally learned investing in Alphabet. But of course, I want to set the expectation this is not driving any meaningful cash flow for me right now in 2025. It's a long-term yield on cost, delayed gratification investment. When I'm looking years out, great dividend growth stock of the future for me. And that's how I look at it. It plays a role in the portfolio. But of course, my portfolio average current yield is 3.6%. And so I make up for the lack of yield here with other stocks. And a lot of them I will share today. I want to share something fun though. Alphabet is not the only Mag 7 stock that I own now. My backyard and corner patrons already know this, but I have been building a position in another Mag 7 stock. Put in the comments below if you can guess what it is. I'd love to know. And if you guess right, I'll let you know. And so check it out in the comments below. Let me know what you think. But believe it or not, PPC, Ian, yep, I'm doing it. I'm building another one. And you heard everything I said right now about Alphabet. A lot of that resonates with the other stock, and I'll cover it in a video in the future as well. So I got to keep going. I have so much to cover today. Believe it or not, the second stock I want to cover today is a tech stock, but a lot of people look at it, hey, Ian, it's a boring, kind of more old school tech stock, but hit a new all-time high today. So Big Blue, I'm wearing the blue shirt to show my support and love for Big Blue. I'm also wearing the blue shirt, though, because of Peter Lynch. Check it out. So I got his books, both of them here, Beating the Street and One Up on Wall Street. I'm just going to put these into view. So first one is Beating the Street. Here you go. We got that one. And then let's see, One Up on Wall Street. So there we go. We got it. This book is in bad condition because I've had it a lot of years. I've taken a lot of notes. I've read it many times. What I love about my man, Peter Lynch, is not only is he my favorite investor of all time, but he loves wearing the blue shirt like this, kind of the denim style shirt. He'll even wear it with a sports coat, old school. Love it, thug life. Anyway, the reason I also bring up Peter Lynch is my second stock is IBM, Big Blue, and he covers it in his books. He always kind of pokes fun at it, that it's one of those stocks that money managers can have in the portfolio. And he kind of says no one ever got fired for holding Big Blue. You'll never get in trouble having Big Blue, whether it's good quarter, bad quarter, having it in the portfolio is just kind of the thing to do in those days. And I'm sure glad I got it in my portfolio because as you can see on the screen, they hit a new all-time high today. And so Big Blue hit 310.75, but it closed at 307.46. I started buying in 2016 in the $151 range. I bought a lot of my position in 2017 and 2018 in the 140s. And so I bought it before Red Hat. I bought it when, again, kind of they had a period where it was maybe their Google Chrome kind of antitrust moment, but for IBM. And that moment was, hey, we don't really have a business plan to move us from here to the next generation. But they came up with it. What they did is they acquired Red Hat, and now the rest is history. But I bought it before Red Hat because I bought one of the best quality businesses in the world when it was on sale, when others were fearful. People were questioning me about this thing. Oh my gosh, I had a conversation with a professional money manager who's just someone I know, friend, and that person, I asked, hey, what do you think about IBM? And they kind of looked at me weird. And so even in the community here, I had a few funny comments like, Ian, are you okay? Why are you investing in that thing? And why are you holding it? Well, it worked out. I love it. That's a contrarian indicator. When I see value and I see something that is of quality, but it's going through some difficulty, but it can make it through it and go to new heights in the future, I take the calculated risk because that's what works for me. Of course, I'm just sharing my personal journey for fun and entertainment, not investment advice, but I like it when there are those contrarian indicators. Anyway, I bought it pre-Red Hat, and the rest is history. But as you can see on the screen in front of you right now, let's just look at it. So what happened is my unrealized capital appreciation on the first tranche is over 100% now. Simple dividend yield on cost, 4.42%. Not bad for a high growth tech stock. I have a lot of lessons from this thing, but first let's just do the news. Q3 results are strong. It hit a new all-time high because revenue's up 7% year over year in constant currency. They increased their guidance on revenue and free cash flow. There's also a press release that they can run quantum on some conventional AMD chips. Good stuff. But the lessons are I like to buy quality stocks. I already talked about it. With a probability of a turnaround, I bought pre-Red Hat. I would say, Peter Lynch, it never hurts to have a little exposure to Big Blue. So I love that. Also, though, this is an iconic example of patience. I will have so much patience because I know the gains don't all come at once. It takes time. And look, I don't even invest for capital gains, capital appreciation. This thing could go down. It could go down next week, and I don't care. I invest for long-term dividend yield on cost. But the reason I'm talking about capital appreciation today, unrealized capital appreciation, is because that's what everyone looks at. And it's a byproduct of the DGI strategy, dividend growth investing. I'm not a growth investor. I'm not a high yield investor. I'm kind of in the middle. I'm practicing a lost art that a lot of people don't talk about anymore as much. But my current portfolio yield, it's 3.6%, but it's growing. Delayed gratification. One day I'll pay all my bills on from my dividends. That's in about 6 years from now or so when I reach those goals that I'm hoping to hit if I keep pushing pedal to the metal. But I do it the slow way, delayed gratification, because it's just how I do it, DGI, dividend growth investing. And I like the byproduct of the capital appreciation. It means something to me. But again, patience. I'd have so much patience with this thing. And I've learned patience. Look, I'm talking about forever here. I'm talking about a lot of patience because these are for me, for my personal situation, buy and hold forever stocks. All right, I got to do the third one. It is none other than McDonald's. And so you might have seen my short already. You might have seen my Instagram reel. I was at McDonald's yesterday celebrating. I went with my daughter. She had a Happy Meal. I had some chicken McNuggets and fries and a soda, a Sprite as well to celebrate. But they increased the dividend. We were all waiting. And so I shared a poll on X. I shared a poll on Blossom Social. In terms of full disclosure, I'm an affiliate of Blossom. I get compensated for signups, so it's free to get started. I'll include my link in the pinned comment below. I love Blossom Social. It's now my second largest social media platform behind YouTube. And so anyway, I shared the polls and most of you were right. The vast majority of you, I asked, do you think they're going to do a dividend increase this week? And most of you said yes. And the reason I did the poll is we've been waiting. We've been waiting and waiting and waiting. And finally, thank you, McDonald's. You came through. I love you. 5% dividend increase. As you can see on the screen in front of you right now, let's talk about McDonald's. So this particular stock is not too far from the recent all-time high of 326. It's at 305. I started buying at 73 range in 2011. On my first tranche, I'm up 316%. And I highlight it because, yeah, this is a channel about dividend stock investing. So let's talk about dividends. Simple dividend yield on cost is on the first tranche over 10%, 10.12. And so that's why I invest, to be honest. It's for that magic 10% number. The goal for me on all the stocks I own in my portfolio, every one of them, including Alphabet, is one day to hit 10% on that first tranche or more. That's kind of the benchmark I hold myself to. That's why I invest. I invest to hit that one day. But the lessons, as you can see on the screen in front of you right now, let's do it. Slow and steady. SWAN, sleep well at night. These stocks can work great. The world is caught up with tech stocks these days, and that's fine. I love tech stocks too. I just bought Alphabet this year. And another one, guess in the comments below. But the dividend increases, they can add up. I'm at over 10% simple yield on cost on the first tranche, not even including reinvested dividends. I'm loving it. And so that's McDonald's. Put in the comments below what you think about some of these old world companies that people just don't talk about anymore. I have another one. So I can't believe this. I was looking in the pantry. I couldn't find the props. I wanted a prop, but the best I could do was this, and Fresca. They own it. They own this brand. And so the next stock today, number 4, buy and hold forever stocks for me is COCA-COLA. I did a video on this earlier, in the week. And I did it when I was in California. And when I was there, I actually had a chance to meet up with my friends. Shout out Sam and Andy. These are two of the most inspiring investors I have ever met. More importantly than that, these are two of the best people I have ever met. So thank you, Sam and Andy, for joining me for lunch and for being my friend. You guys are awesome. I learn so much from both of you every time we meet, but more importantly, it's just fun. And so anyway, that same day, I did a little YouTube short on Coca-Cola because the stock was surging. They hit a new all-time high because the earnings were good. Check it out. Let's do it. So on the screen, I'm going to go backwards here. Let's start with the news. Organic revenues up 6% year over year. Comparable EPS, earnings per share, grew 6% year over year in their Q3. The numbers are good. And so some of the lessons I've learned from Coca-Cola is it peaked in 98, then it took to 2014 to hit a new all-time high. I bought in 2011, but it takes a lot of patience. And so remember to practice patience with investing. Another lesson just from the news you just saw is, hey, these old world companies that are not in tech, I shouldn't even call it old world. Look, these companies are innovative. Coca-Cola is always coming up with new formulas, new ingredients, new beverages. McDonald's, they're always looking at tech. They have AI. I ordered it at a kiosk when I was at McDonald's the other day or yesterday. And so I shouldn't call them old world. I just call it that because they're not tech. They're not pure play tech companies. But I shouldn't say that because we can all get exposure to technology by investing in companies outside of technology that are implementing technology. Anyway, the point, though, the fact of the matter is, don't forget about stocks that are not tech stocks. That's probably the way to put it. Let's look at the numbers. As you can see on the screen, so Coca-Cola Company, sleep well at night. I bought this thing originally in 2011 at 31 and change. It's now at 69.71, but it hit an all-time high of 74 a few days ago. My yield on cost on that first tranche, simple, not including reinvested dividends, is 6.54%, which is great. Well on its way to getting close to that 10%. And unrealized capital appreciation on the first tranche, 124%. I also, though, want to give a shout out to my friend Michelle. So Michelle's over on Instagram. I talked to her and she was saying, hey, Ian, I bought Coca-Cola all the way back in 2004. That is amazing. Wow, Michelle, a number of years before me even, because I bought in 2011. Congrats. And I always enjoy talking to you. You're a wealth of information and one of the best dividend investors I know as well. All right, everyone. So those were the first four. I'm going to go through number 5, and I have a few bonus stocks too. If you're enjoying the video so far, please go ahead and subscribe. It means the world to me. I'm still, believe it or not, I have the goal. I want to get to 100,000 subscribers. It's kind of slower growth these last few years. I think some of that is a reflection of the market, that a lot of investors these days, they're going towards growth or towards current yield. DGI, which is what I talk about. It's maybe a lost art, but we'll see. I'm still doing it and I love it. It works for me. About 6 years from my financial goals, slow and steady, delayed gratification. I got it all. I got the dividend growth and I've got the byproduct of the capital appreciation. I love it. But please subscribe. It means the world to me. It really means the world to me. Anyway, the 5th stock I want to talk about today, buy and hold forever stock in the news. 5+ years in the making for some of these stocks to have this kind of news. It's RTX. I love this because RTX back in the day used to be UTX, United Technologies, and I covered it on my channel way back. By the way, I mentioned a lot of videos today. I'll link to these resources in the pinned comment below and a bunch of them in the description too. Covered it way back before it split up. What happened is UTX merged with Raytheon, became RTX, but they spun off Otis and Carrier. If I actually add up now RTX, Otis, and Carrier, because I still own them all, it's still one of the top positions in my portfolio. It's actually, I think, number 3 right now. It actually, number 3 or 4, it kind of fluctuates, but it's up there. I love to see that because it's a growth engine in the portfolio. I'd say all of these for me are sleep well at night, but they all play a different role. Coca-Cola, obviously, slower growth, probably slowest of the bunch. But I have stocks like Alphabet and RTX that make up for it. Fast growth. What happened with RTX? Check it out on the screen in front of you right now. So what happened with RTX is big news. Q3 results are out. Revenues are up 13% organically. Adjusted EPS up 17% year over year. Amazing, amazing numbers. It hit a new all-time high, $180.50. I see it now trading at 178.75. Look, I started buying this thing in 2013. This is going to get a little complex because when I bought it, it was UTX. I started buying UTX at $95.67. If I go to the RTX website, it's telling me that my cost basis is 55% of that amount because the rest of it is allocated to the cost basis that I have on my Otis and Carrier shares. So I take 55.17, I multiply by my UTX first tranche of 95.67, I get 52.78. So I started buying RTX at 52.78. It's at 180.50, or that was the all-time high. It's actually at 178.75. On the first tranche, I'm up 239%. Simple dividend yield on cost is 4.77%, not including reinvested dividends. I think there is a bunch of lessons from this one. One lesson is, look, spinoffs can do really well. Otis and Carrier, I still own them. They've done very well. I'm proud to own them. Not all spinoffs do so well, though. I own Realty Income that spun off ONL, Orion Realty. That one did really bad. I don't own it anymore. I thought it was going to do well, but it didn't. And so that's an example of a spinoff not doing well, and an example of just me. I'm no different than all of you. I'm sharing my lessons today. And I'm sharing a lot of positive lessons, successes, I would say. But I face setbacks too, and I continue to learn. The spinoff of ONL was one such example in recent years. I thought it was probably going to do pretty well, and unfortunately, that was a REIT that did not do so well. But thankfully, Realty Income continues to do really well. But that was one lesson, that spinoffs can do well in some circumstances. Another lesson is not all the growth happens linearly. It seems like RTX has hockey sticked recently based on great numbers. And so I just have patience. And I know with investing with stocks, there can be slower periods and faster periods. And in the faster periods, the stock price can go up more and the dividend can grow quicker too, because the stock price is going up as a reflection of earnings. And so earnings are really good. They can grow the dividend quicker. Something else that I learned with RTX over the years is not to sell a winner. A lot of investors with dividends, DGI, sometimes they see a stock appreciating a lot and they want to sell it. And they want to sell it and deploy the capital to something with a higher current yield. And look, everyone has a different strategy. They all can work when applied correctly. I'm just sharing my journey for fun and entertainment, not investment advice. But what I found in my personal situation is I don't like to cut winners short. Stocks like RTX, another example is Caterpillar, which has gone up a lot. I let them ride because I believe in these companies. They're growing for a reason. They're doing really, really well. All right, everyone. So that was the first 5. I have some bonus thoughts. Before I do that, please go ahead and like the video. It means the world to me. Thank you so much. If you're able to like or subscribe to the channel, it helps me. It helps my channel grow. I have some bonus thoughts, though, and you see them on the whiteboard, too. I'm going to go quick because there's a lot to cover, but just the news, it just keeps coming. As you can see on the screen in front of you right now, I have 2 more stocks. So the other 2 stocks recently that have done really well are Southern Company, a electric utility that I own, buy and hold forever, hit a new all-time high. I think the reason for that is solid demand for energy with AI. But I also would say just it's a well-managed company with a solid dividend, and I bought it on sale many years ago. So that was one of them. Another one is Honeywell. Honeywell came out with really fabulous earnings. And so Honeywell is a stock that I own. Good earnings, stock went up. And this is actually something I want to share. So they're going to be spinning off their materials division. Thank you, Sam. When we were at lunch, you mentioned this to me. And so Sam, he mentioned they're spinning off the materials division. And I was thinking, he said, what are you going to do? And my gut reaction was, oh, I might just sell it. You know what, Sam? I've been thinking about this. And as long as the materials division, it pays a dividend, I need to analyze it a bit. But I'm kind of thinking now I might hold it. The reason I have the gut reaction to sell is I already have 41 positions. I actually have 2 new positions, the tech stock I already mentioned and another one. You can guess these. And I'm going to cover these, by the way, in future videos. But I'm thinking now the materials division, I'm going to keep that one if they pay a dividend and if they increase it. Some more thoughts to share with all of you in the video today. Check it out on the screen. Stocks are increasing in value. And sometimes when I see a lot of stocks increasing in value, hitting record highs all at once, it's a signal to me to remain cautious. Look, the fundamentals are good here, but still, I like to remain cautious. I see a market right now that there's kind of a exuberance, if you will. I'm celebrating even. I'm here sharing my wins. And I'm excited about it because, look, even if these all go down quite a bit next week, I'm good because I invest for dividends. Capital appreciation is a byproduct of what I do, but it's an indicator that I'm on the right path. But I just want to remind everyone out there and myself, hey, things might keep going well because the fundamentals, they are kind of good. But that being said, a lot of stocks are hitting new all-time highs. And so that's something to be cautious of. Something else, I forgot to share this earlier in the video, but with the McDonald's segment, I want to give a shout out to my friend on Instagram. I hope I'm saying your name right, Giolio. He shared with me McDonald's, the news, the dividend increase. I was waiting and waiting and waiting, and I even ran the polls on X and on Blossom Social, and I'm like, when is this thing coming through? And then all of a sudden, I see my friend's story, Giolio. I see his story, and he's talking about the McDonald's 5% dividend increase. And so thank you, my friend. I always enjoy our conversations over on Instagram. And everyone, I link in the pinned comment below if you want to follow me, connect on Instagram as well. But some more lessons. As you can see on the screen in front of you right now, I also want to share SWAN, Sleep Well at Night. I already talked about it before, but I think this is something that a lot of investors have forgotten in recent years. I think a lot of these stocks that I'm mentioning today are reflections of my SWAN strategy, my DGI strategy, my strategy of patience, because I bought a lot of these, most of these, all of these when they were at points in their journeys when they were on sale. But yeah, I like to sleep well at night, and I like DGI stocks, and I sleep extra well at night if I can pick up any of these on value. Look, with these types of stocks right now, I don't really see a ton of value with them, although, fun fact, I recently shared a video on my channel where I interviewed Joseph Hogue, CFA. Bowtie Nation, shout out. But he shared a video on his channel recently where he interviewed me. He put me on the spot. He said, hey, Ian, if you could buy one stock right now to hold forever, what would it be? And I didn't prepare for this. I had to just think and kind of come out with a quick answer. And my quick answer was Alphabet. And then I went home that night and I was kind of thinking, Ian, did you answer that right? And I thought about it a few days. And after about a week, I was like, you know what, Ian, you answered it right. And so that was fun. That was fun. Yeah, so right now, even at all-time highs, I'd probably consider, for my personal situation, not advice, but maybe picking up a little more Alphabet out of all of these stocks. But the rest of them, I would wait for them to be on sale. Right now, I'm buying other stocks. These are forever holds, though. And obviously, I already have big positions in all of these. Big positions. But if I were starting out from scratch, maybe my answer would be completely different because I want to establish positions in the highest quality businesses in the world, and a lot of these are core to me. But anyway, I answered Joseph and I told him, hey, yeah, Alphabet. And the reason for that is I just see a business that will continue to grow the dividend, and be around for a very long time. And they're branching into so many lines of business with the Google Cloud, with Google Search, with YouTube, with quantum computing, with Waymo, with AI. I don't really see a scenario where they won't continue to grow, and it just keeps getting bigger. And we're in kind of the middle right now of this AI revolution where they will probably be able to continue to increase the dividend. And I look way out, delayed gratification, yield on cost, it's going to be great. And so that's kind of just a fun tidbit out of all of this. But for some of these stocks, and I share this in my corner Patreon portfolio where I share everything. I share percentage allocation to each position on there. I don't share value of the portfolio. That's something I keep to myself. But I share the full portfolio with the percentage allocation to each position. And you'll see on that particular portfolio, at least, for some of these I'm reinvesting, others I'm not. In general, I believe for most of the ones I'm covering today, I'm reinvesting. I don't think I'm reinvesting for IBM right now, but I think for the rest of these, I'm reinvesting. And some of the other stocks I mentioned, like Realty Income, for example, I'm not reinvesting right now. I use that one to help pay certain bills. This is kind of part of my winner, let the winners run strategy. With real winners, like these are really good quality stocks. I don't like to cut them short. So for stocks like this, typically I like to reinvest the dividends. Anyway, just a few lessons. Fun video today. I hope you enjoyed it. If you did, please click the like button. It means the world to me. And I'll see you in the comments below. Before I go, in terms of a full disclosure, I'm long Blossom. I'm a Blossom Social affiliate. If you use my affiliate link in the pinned comment below to sign up, I will be compensated, but it's free to sign up. And it's my second largest social media platform now. I love it. In terms of full disclosure, I'm long the stocks mentioned today. I'm long Alphabet, ticker GOOGL, IBM, Big Blue, ticker IBM. I'm also long McDonald's, MCD, COCA-COLA, KO, Raytheon Technologies, RTX. I'm long Otis, ticker OTIS, Carrier, ticker CARR. I'm long Realty Income, ticker O. I'm long Honeywell, ticker HON. I'm long, trying to remember all these. I'm long Southern Company, SO, and Caterpillar, ticker CAT. Sometimes people ask me, Ian, what are all the stocks you own? Well, Corner Patreon, I got that, but also I just share so many in these videos that you'll get them sooner or later. Thank you for watching, by the way. It means the world. Before I go, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. Please consult your licensed investment advisor before making any financial decisions. I'm not offering any investment advice. It's possible to lose money in the stock market. Additional disclosures, disclaimers in the description below. I love you all. I'll see you in the pinned comment below. I'll see you on Instagram, on X, on YouTube Shorts, on YouTube, on Blossom. And I'll see you in the next video. Hey friends, so just a quick addendum to my video. I actually had to film this video twice. The first time the audio wasn't working, and so I decided to redo it to make sure the audio was good for all of you. But I forgot something else when I refilmed the video today. GenExDividendInvestor, shout out. I'm going to include in the pinned comment below a link. He just did a video, and it highlighted some of the YouTube channels that helped GenExDividendInvestor get kind of inspired early in his journey as part of his YouTubing. Obviously, he's been a dividend stock investor for a long time, like myself, but kind of taking that online onto YouTube, he went down really kind of a walk down memory lane, and he mentioned a lot of us YouTubers from those olden days, and that video was really touching. I really appreciate it, Gen X, for the shout out. I got some new subscribers when he posted the video, so that meant a lot to me. And I just wanted to say thank you, my friend. It means a lot. And more than the shout out, I really enjoyed that video because it was a moment in time, I think, that was very special on YouTube. And I remember all of those same channels that you mentioned as well, in addition to mine. And these are all YouTubers who influenced me as well. And as, of course, Gen X, you've influenced me as well. But it was a special time back then, and just kind of remembering those memories and going through history. I appreciate it. I love your video. Thank you, my friend. And anyways, everyone, I just wanted to add that addendum to the video. Check it out. You're going to enjoy the video. I'll see you all in the next video.